Good morning, everybody. Welcome to the Flow Show. It's Tuesday, 12th of September. Hope you're doing well. Good morning, Kay. How are you, mate?
Morning, Ryan. Morning, everybody. Yeah, ready. Gonna go. It's going to accelerate for the rest of the week, right?
Yeah, a little bit of a calm before the storm, I think, this morning. But we shall get into what's going on. A few moves to pay attention to going on overnight and this morning. Right, let's get cracking then. Reports out of China that they're going to relax some home buying curbs in the Fuzhou region, if I can pronounce that right. So further moves to get the property market up and running again. Analysts speaking to the China Securities Daily say that China may cut the RRR by year end. We're in the zone really from when they previously told us they may cut the RRR into end of Q2 into Q3. So we might get one, we might not. The China Securities Journal has a report saying that the PBOC is seen having ample policy tools to safeguard the yuan. So again, more analysts and people speaking on that. The PBOC fixed back below 720 overnight. They fixed at 7.1986, largely due to obviously what we saw the moves previously on that. Don't know why those moving averages showing up there, taking their time, but yeah, they fixed at below 720 again, so maybe signs of putting the brakes on once more. Over to Japan, PM Kishida is shuffling the deck as far as his cabinet is concerned, said to be keeping on Cabinet Secretary Matsuno, and is considering keeping Suzuki, Finance Minister Suzuki, on as well. So we have to see if there are any key changes to the men that matter for us. But Suzuki, staying as Finance Minister, will be the big one as far as we're concerned, regards to policy intervention and the like. A senior LDP official, Seko, said that he interpreted BOJ's Ueda's comments to mean the BOJ will continue with easing. Bit no shit Sherlock there, because he said as much as well. So bit of a downplay on what Ueda said. Finance Minister Suzuki was out as well at a presser last night and said that the specifics of monetary policy should be up to the central bank. He expects the BOJ to conduct monetary policy appropriately and has no comment on Ueda's remarks on negative rate policy. Do you think that's just a typical bit of showing independence, or
yeah,
is the silence saying something?
It's those typical comments from Japanese officials. They don't want to hurt anyone. They don't want, but they still want themselves to be heard. No, it's the typical comments after whatever a central banker says, or to complement some officials. I'm not going to read anything behind on.
Yeah, they are all pretty much on the same page, aren't they? I mean, you know, that's what Kishida's working for: getting wages up, changing the deflationary mindset, getting the economy moving, which, if it works, naturally will lead to tightening of policy. So they're all pretty much working hand in hand. I guess if we hear comments that go against what Ueda's saying, that might signify or signal some problems. But yeah, they also seem to be on the same page, don't they, mate?
Yeah, they are. And really what we are, okay, of course, the speed of normalization, I mean, the magnitude of normalization will be very important, of course. But I think for the time being, what we now need to determine or waiting for clarification on is what they mean by the end of the year, whether it's this year or the end of their fiscal year, which I still think is rather the case. But I've seen more and more economists or strategists saying that they may already start to move in October, but perhaps that's one quote from Deutsche Bank, which has been repeated by others. So it's it's an uncertainty, and I reckon we are going to find it back as well in how the yen is going to trade this uncertainty.
Yeah.
Logically, we should see buyers on dips in yen, but then as we were saying many times, if you look at the interest rates, we're still looking at a very big divergence between the Japanese interest rates and the rest. So how long can you keep in time? I mean, how long can you keep a long yen position before funding starts to bite? You have to be right quite quickly, right?
Yeah.
So that's going to be now the timeline is going to be very important to start with.
Yeah. So, I mean, you know, just taking an early thought about the upcoming BOJ meeting. I mean, it's, you know, I doubt they're going to change anything. I doubt they're going to move on YCC again so soon. So maybe the most we got to hope for is a bit of a language change, maybe a bit of embellishment from Ueda on what he said in this interview. I suppose there's a bit of a risk he dials it back a bit after seeing the market reaction, which hasn't held too much. He's given a bit back, but it's nothing volatile. Could we see the market getting over excited about this upcoming meeting, or do you think maybe the ones later in the year?
That's what I said yesterday already as well, and I do think that this scenario, if you could go on the .yen while you're on there, that this scenario from Bank of Japan meeting end of July, we could see a repeat of that.
Yeah,
that is the market hoping for a lot, trading it in the way, people getting out of short yen positions because there is this risk of, and then waking up the next day or over the Bank of Japan meeting and seeing that not a lot has changed finally, and or we still need to wait, and that's where the issue is with being long yen. If you need to wait for another month before the October meeting, are you going to stay short yen for a month and then just wait for then perhaps to do something? So we can have this kind of a repeat scenario. I don't think of the same magnitude because we started from much lower back on the 28th of July, right? We started in the around 138 after the Bank of Japan meeting. But so I think the width of the moves, the magnitude of the moves will be less because there is already now this preparation that Ueda as well has given us. But if it turns back a little bit, then we are going to have the same scenario. And imagine, let's imagine for a minute that we're trading what? Max down to somewhere 145, 144. If you stick to that, a disappointment move to the other side, we may end up after the Bank of Japan meeting, if it doesn't give us as much as the market wants, and then we can end up very close to 150 again all of a sudden, right?
Yeah, exactly.
And that's a big scenario that I have in mind right now. But before the Bank of Japan meeting, I suspect, unless there is something like really funky on tomorrow's US CPI, or the ECB says that we should be buying a lot of euros, so the euro yen is going to hold up as well. But I suspect that there is going to be this kind of speculation again into the Bank of Japan, regardless what the other central banks are doing, for some sort of change, whether it be wording or actual him saying that they will buy, for instance, less JGBs and let the 10-year go to 1%. You know, there's again, there's going to be a lot of possibilities, right, to how they tweak it.
Yeah, I think this meeting's probably a bit too early for them to really signal a change in course. So yeah, I'll be doing the same, looking to see whether the market's just getting a little bit too over hawkish, and potentially look for a trade the other way on the meeting. But like you say, lots of permutations can happen with this one. Moving on to the UK and jobs data this morning, and a bit of a mixed amount of data. Overall, I would say it's on the soft side. We saw claims rising. We've seen people coming out of employment. The employment change there total. This is now down 207,000 for the rolling 3-month number. Unemployment did tick up there. Wages went higher than expected. Headline wages, including bonus, 8.5% versus 8.2 expected. So I was expected to dip, but some numbers had it as coming in unchanged at 8.4. Sorry, that was revised. So anyway, hotter than expected. Take out the bonuses, they remain at 7.8%. So still running at hot levels. A lot of this is still to do with pay deals going in for civil service jobs, NHS workers, so public sector wages, giving a bit of a headache to the Bank of England. Those should start to wash out maybe from next month. We should start to see those numbers coming out. Now, what this number has done, for those that may not know, is we have the government national pension system, and one of the parts is called a triple lock. I won't go into the details, but what this number 8.5% has done is now that's the number the government will have to take to raise national pension levels by. So this one-off shock from the NHS has now put a bit of I think it's a 2 billion bill to the government on them having to now raise the national pension rate in 2024 by 8.5%. So it's a bit of a one-off factor that's caused this headache for the Chancellor, but good for your pensioners who take the national pension. But it just goes to show how these numbers can get embedded into other things, particularly in the UK. So anyway, the jobs data, there's enough concerns in there for the Bank of England to say things are slowing down a bit. Vacancies were down 64,000, so that's like our version of the jolts, without the the JO part, not the LTS part. So vacancies down for the 14th consecutive month. So also showing that things are not as good as they used to be. We'll keep an eye on that. BOE's man, meanwhile, says it's best to err on the side of further tightening. Over tightening is easier to rectify than not moving. Holding rates risks inflation becoming embedded, and neutral interest rate likely higher than in the past. All in all, she's going to be voting for a hike next week, pretty much going the opposite in her comments to Dingra and maybe even Bailey in some aspects there. So we definitely know there's going to be at least one vote for a hike next week, likely more as well. Germany's ZEW was out this morning as well, and again a little bit mixed. Economic sentiment generally improved, only down 11.4 versus -15 expected, and better than the -12.3 last month. However, current conditions got a lot worse, down 79.4 versus -75 expected. The Eurozone economic sentiment as well, looking a bit worse there. So for Germany, those numbers could have been worse. We could have seen the headline number down bad as well, but still big negative numbers there. No let up for the data in Germany. Over to the US, and New York Fed had one of their inflation surveys out, which saw 1-year inflation expectations ticking up to 3.6% versus 3.5 previously. The 3-year went the other way, down a pip to 2.8% versus 2.9 prior. The survey pointed out that a record number of consumers said credit was now harder to get. Those tighter financial conditions that we spoke about a few months ago still in play. And households were more downbeat on current and future finances in August. We maybe see that reflected in the retail sales numbers this week. JP Morgan CEO Jamie Dimon, however you want to call it, went the other way. He said the consumer is pretty good and excess savings are normalising. We shall see, as I said, from those retail sales that are upcoming. Not a lot else on the headline front that I could see. Anything you pointed out, Kay?
No, not really, but we have to even though little fat boy always makes a lot of noise, and we're probably going to have, but I just want to keep a distant eye on those meetings between Putin and Kim, and because there's those meetings going on in Vladivostok, and yesterday I saw something about the Chinese are not going to like this because Kim takes it in his own hands. But to me, there's the Chinese will have probably validated this meeting more than anything else, right? So it's rather the opposite that I'm looking at, and let's see if anything stronger than just loose words is going to come out of that. That's amongst all the other things that we are watching right now. That is one that I think we should, because it could influence a couple of currencies, right? Or if all of a sudden China and Russia and North Korea start to talk more strongly, it could impact on in the more medium term, perhaps. And for the rest, yeah, it's been a lot of opinions again overnight that I've read, but nothing really of news that came out.
Yeah, it's funny that I saw the same thing when you go look at what headlines and news items come out. When you start seeing a lot of opinion pieces rather than actual news, you get an idea that the market may be a bit quiet at the moment. Everyone wants to have their say on things.
Because, for instance, I saw this stuff about Britain's failed offshore wind auction. There's actually, if you look at news outside our little world, let's put it that way, if we only look at central banks and a bit of data, but outside of that, the news for the UK is not great, right? All of a sudden, over the past weeks, I'm not reading too much positives. Let's put it that way. And
never is.
Yeah, I know, but and as I've been saying, sometimes the market gets a little emotional, and we may be just ahead of such a period. If the Bank of Japan, the Bank of England messes it up next week, that could be they will have to walk a fine line, in my opinion, or the market could get a little overly negative and send the sterling down for another leg lower. I really think next week is going to be important. What they do to Bank of England, they can't make a mess of it this time. But of course, we are guaranteed, Bailey being the governor, that they will make a mess of it. So.
Yeah, and we've had some comments out from Sarah Breeden, who's going to take over as deputy governor. Nothing too hot. Said that risk to inflation forecaster, the August inflation forecaster, to the upside. Not forecasting a recession, and says there's an awful lot of tightening that is yet to come through. So if we had to take a slant from her, she's sounding a bit neutral on the hawk dove scale at the moment. So nothing really to take from her just yet. But she's at this is a hearing for joining the MPC. So we'll keep an eye on her further comments to see what side of the fence or what branch she wants to sit on. Right, let's have a look at some prices. Dollar yen. So a bit funky yesterday, as expected. The market not really knowing what to do with it all. We obviously had the initial big sell-off through Tokyo into the Europe morning. Then we had a bounce to 147. Then we had another sell-off. Couldn't get down to the prior low or test the 146 area. Pulled up at 20. So a decent step up off that low. Bit of protection there. It's been grinding higher, but we're still running into trouble up at this 147. And this was my marker yesterday to see whether the UIDA comments would just be a flash in the pan thing. But it seems that the market may have just been given a little kick in the arse, and is a bit more reluctant to push the upside here. So 147 is our level at the moment. I think the support level needs to be a bit more defined. We've got obviously these intraday levels showing up now, which gives us a bit of a area to play with. We're still far from the bigger support area, the first one down into the 145s, so we're still closer to the top than we are to the bottom of this recent range, let's call it that. So the fact that the dips keep getting bought suggests we might be looking to move back above. Whether we do that before the CPI data tomorrow remains to be seen, but as you can see, we are grinding higher and the dips are being bought quite well, so maybe we're going to push up to 147. If we do, I'm sure a few of you lot will be looking at whether we close the gap. For the record, I'm not a gap trader. No one just buys anything or sells anything just for a gap to close. It can take 2 years for a gap to close. So I don't put any significance into gaps at all personally, though I know a lot of you do, and all the power to you. What do you think of the dollar yen right here, mate? Bit of middle ground in the short-term range?
Yeah, now, okay, what I would say is that now we wait for what's going to happen on the other side of the yen pair. Whether it be dollar yen or with the US inflation, or euro yen with the ECB the day after tomorrow. But again, we're in this scenario where you've got to be on your toes, because you either said something, but are you really going to sell dollar yen and saying we are going to this is it? We've seen the top and now we're starting to reverse because the Bank of Japan is on the move. Again, it's too early to say. So I expect to see a bit of ping pong, and it's likely that both sides of the high low that we've seen. Let's put the your 147. I think is pretty good, because twice we've stopped just ahead of it now, right? Just under it. So I think for the short term, that's a good marker. And for the rest is let's see if we can break yesterday's low or Friday's high, really. And they could both end up being pain trades, but both end up being trades to fade if you really have a bit of deep pockets, I would say. Because I think there is absolutely zero reason right now, unless, again, as I said, the other side of the currency pair tells us that something needs to be done or can be done. And I think we are going to play ping pong right now. And because you can't, as I said, you can't be long yen for too long, because let's, for instance, tomorrow, it's Wednesday, already 3 days of funding. If you're short dollar yen, you will see it come through in your account. That for the short term, for even more medium term. Yeah, I really think it calls for range trading right now if you want to trade it, or stay out of it until you hear from the Bank of Japan. That's the other thing. There's other stuff moving. There's I might get interested to just trade that range, but I'm not going to get interested in inside any of it, because it's a complete flip the coin right here, right?
Yeah,
you can have your opinion saying like, oh yeah, Bank of Japan, and you will find rally sellers, which is likely the case. But then if it goes 20-30 points higher and those sellers are done, what do? You know, that's just the question. And that is so possible inside these ranges that I'm just going to steer away from it right now, unless we go to the edges and then try something, you know.
Yeah, I mean, I think, you know, if you're a scalp, I think the only trade here in the middle is if you get a break of this 147.
Yeah,
it could be that you know, the market thinks, okay, we're all done, and then we get another look up towards those highs. So it might get a little bit of acceleration through there and push up towards those highs again. But you know, if you're going to give that a go, you're going to keep it very tight, and you're not going to give it a 50 pip stop or anything like that. If you're back below sort of 146.90, 85, you know, you're likely wrong, and you want to be getting out. But you know, there is stuff to do, but like Kay says, you can't marry a trade. You can't pick a side and trade the Bank of Japan when, you know, with 20 pip clips and 20 pip stops. So it's a different ball game to trade. Cable going to have a look at, and again, it's a lot of pairs looking similar this morning. You know, cable had that move up, got above 125, one of those small steps, couldn't get up past the next level. I had around 125.5, and it's been downhill ever since. Maybe we're going to get another look at 124.50 again. I would be a bit worried coming back, you know, with this speed back to this level. But there's nothing really going on to say why it should break, unless the dollar's doing a bit of driving yet. The UK data was a bit soft, but that's been reflected, you know, pretty much all morning. We are pulling up, you know, 10 odd pips ahead of that low, so probably the buyers down here have got a bit of protection coming in there. I'm still long a bit, so I don't know. I'll think about adding, but I might be thinking about a little sell stop or reverse my longs into a little short just to see if we get a break with it. As any legs or not. Not going to go out on a limb with it though. It's going to be pure scalping, small trades, keeping things very much contained and tight. Euro sterling is benefiting, and we're hitting a trend line. This is again just a bit of pound weakness this morning. This trend line is, you know, it's had its moments. We can't get and hold above it, which is the most significant thing. I can see from this we're up towards this 86 handle as well, 86.10, so a bit of a zone just around here to see whether we can break it or not. Nothing going on really again, so you know, I don't see any reason for this to significantly break. If we couldn't break it in these couple of times, I don't see why we need to break it this time, but I'm still long. If we break it, happy days. And I'll watch to see what happens at the next level. We get up to this zone, 86.5 up to 86.70, and well, maybe pie in the sky, but we might get a look at the big old 87, 15, 20 area, which we haven't seen for a few months. But again, I'm not holding my breath. It'll be something if it just moves 10 pips from here, let alone 100.
Well, you never know, huh, on the ECB.
Yeah, well, it might be the ECB that does it, of course, but we've also come through a couple of ECBs and it still couldn't. So again, I'm not holding my breath. You know, this is the one you really need a lot of patience for. You know, but on today, I don't see anything big happening here. Just today, we shall see though. You can but hope. Aussie dollar, a bit similar to what we're looking at in a lot of pairs, and I've been saying this pretty much since we had these moves off the lows, that we're taking out the small steps, but then you're hitting another small step, you can't get over it. If you can't get over it, you get a bit of a pullback. Then you have to see how the others do. We're not quite getting a pullback to the 64 handle. That's where I'm expecting any dips to find a bit of support. But this is all, you know, while it's quiet type stuff. You know, CPI report is a different kettle of fish. Tomorrow, you know, we could be above 65 or we could be below 64. But while things are quiet, if you're scalping around, you've got your little minor levels to trade. Don't want to give them a lot of room. In the bigger picture, it doesn't mean much unless you start breaking above. For me, it's still this 65, 20, 40 zone that we need to get above and hold above, and that might mean we start turning around the trend. Dollar CAD still huffing and puffing on the bounces. Again, a little bit of indecision coming in here, which way we want to go. The dips are being bought. We are, you know, creeping up from the lows, but then the highs are coming in a bit lower as well. So we're looking like we might be going one way or another. If we can't get back above 136, we're probably going to get a test further down, 135.5, maybe even 135. So again, another one that's a bit middle of the road. Kay, do you want to have a look at anything, mate? I'm sure you do.
Yeah. Let me show a couple of things. I'm not going to show an awful lot today. Just with this cable, right? We had this blip. That's the sterling and US differential. So the higher it goes, the less. The more differential this time, because it's positive in sterling, and it's come off. This was around the turn, around the this one contract rolling into the other, so that was a bit of a technical blip higher, and now we're starting to come off again. And there's not much to say around here where we are now. But what's going to be important, and that's going to probably be shown over the combination of, and I'm running the events a little bit, perhaps yet tomorrow's CPI out of the US, and then especially over the combination of FOMC and the Bank of England next week. This is one that you are going to have to watch, okay? And especially for the sterling, if we start to get closer and closer to that zero line here again, which is really going to be how shall I say, a psychological level that we will have to watch. Not saying that we go there, with the Bank of England expected to raise rates and the FOMC to stand still. This could mooch around here or actually go a little bit higher again. But I mean, this is something that from now on I'm going to keep a close eye on. And then you look at the yeah, I know what I've done. You look at the European with the US differentials. Look at what's happening. So this is your move that we had in the euro dollar and stuff lower. And look, since then, what's happening here? And we have been supported here, but we are not getting any higher. Look at your euro dollar; it's very stable as well. So this is another one. Excuse me. That we are going to have to keep a very close eye on for the ECB the day after tomorrow, okay? Well, Brian, I'm not really looking at starting to complicate patterns on yields because they are difficult stuff, because you have the bonds and things. Perhaps in the bond markets it's easier, but I'm going to keep it. I'm usually keeping it to horizontal levels and just a simple trend line. This is a trend that's been going on, and this is around your 112 or so euro dollar, and we've been coming off since then. That is, as I've been saying already a good few times, one of the drivers of euro dollar, those differentials still, okay? And we are a bit flat. Expect this to start moving from perhaps tomorrow on over the US CPI, but I think especially on the ECB the day after tomorrow, okay? So this is just a bit of preparation for you guys to have a look at. Yeah, and Brian, I mean, don't overcomplicate it, okay? Don't start with too many moving averages and stuff, and don't go on a too short time frame either. Keep it like simple and keep it simple, okay? Just look at the overall direction rather than putting too many patterns on it, okay? These are ones that you want to keep relatively simple, those differentials, okay? I'm gonna have a quick look at our JGBs. They are, albeit we had the gap or to over 70, and we here. The Bank of Japan was again in the market buying some JGBs. I think it was scheduled, this one. So it's moving higher gradually. That was to be expected as well, as I've been saying. I think we may be around 75-ish before the Bank of Japan, but keep an eye on the JGBs on the 10-year, okay? If that really starts to move higher, then likely your dollar yen is going to be retesting the lows, or at least the yen gain versus other currencies. So the dollar yen, Ryan already said that yesterday's low that we've seen, I think on the shorter time frame, I showed that one as well. That yesterday's low, then the 147 is really where we keep an eye on. It's hanging around there. I'm really not tempted to trade in the middle of this range right now. Anything can happen, but I do expect though to find the both ends of this range to see interest. Just because people will be on their toes, they don't want to go overly long dollar yen into the Bank of Japan. We also have the FOMC ahead of it, so there may be some speculation And I would say if we see bigger speculative moves getting to the downside, post BOJ, this zone, and I know somebody asked it in the room as well. I think this zone here, 143.90, 144.5. If we get there in two and post BOJ, that's the one. Unless we trade much lower, of course, then we are going to start to look at 140s. But if assuming that there is a bit of speculation into the Bank of Japan, which I think is possible, this to me is going to be an important zone for when we come out of the Bank of Japan. If we are well above and they don't do anything, that's then it's 140, 48.80 and 150, of course. But if we are lower, that is going to be a zone that I am going to be very, very interested in. Okay, so that's and I'm front running events a little bit because I don't see too much to really change stuff today. You know, ping pong 124.5, 125.5 in the cable. If you get below, as Ryan said, perhaps being a bit worrisome for the sterling right now, and we could have a quick look at 140.24 to 123.95 figure possible. I just want to have a quick look on some others, and well, Euro yen is a mystery, but Euro CAD, and I missed the move today, but yesterday I was playing it a little bit on the short side, went out of it quite nicely actually around here, and then it rallied again, but I didn't jump in. I was off the desk. I think it's still looking fragile, this one. Okay, and I'm looking at oils, they are still bid, and looking at the dollar Canada, which is broken back below that resistance zone. This one, I think, could really get a bit of a knock on the head if ECB fails to be hawkish. And I'm looking at this one as well, which is a Euro Aussie, which for the time being is doing a bit. And the Aussie is doing better compared to sterling and the euro, for instance. Look, we are not too far from horizontal support here, and there is a possibility to go and at least have a test of the that little wedge here and see what happens there. And those are already crosses that I'm going to keep a very close eye on once we get into the ECB. There was one that I was going to look at as well. Yeah, this one, for instance, as well. Euro Noki. We are banging our head against this broken trend line. And that's another one which is going to be interesting into the ECB, especially if Brent continues to go up and if gas continues to be supported. It's very, how shall I say, it is very wobbly and volatile, the gas market at least. So be a bit careful with that one. But it's already pretty decent on the trend line here. And then we have to look at what happened in MIX, okay? And something really odd happened yesterday, and that was going into the London fixing. I wasn't in, yeah, exactly. I wasn't into, I was in the office right then, but we broken sub 1740 in the dollar MIX, and we really had a decent acceleration already into the next support level, 1725 here. That I think, and I didn't see too much apart from some liquidity injections into Pemex. Perhaps that could have played a role, but I don't see that article coming out exactly at the time where it happened. I really think it's like a big stop hunt for the one, but also telling us, you know, so we had this, let me do this. This is the currency hedge scare, right? And if you look at the 38.2 of that move, 1733, we are below, okay? The 50% of that move now is 1720.21. I think the market is telling us that they are less scared now of what happened when when it all came out, you know. And the euro makes is also giving us the same signals. I was telling about those resistances when we were on the way up. Not saying that the resistances really have done their job, because it's more like the market being scared or less scared, you know. But I think this kind of move tells us that it's much less scared right now. And I'm going to have a look here on the Euromex, anywhere between 62 and 68, to see if we can, on any retracement, if we can find a top and perhaps continue to slide lower again. I do think the scare is more or less over there in for the time being anyway. Another one that I'm keeping an interest in is this dollar rand. I've identified two levels. Yesterday's around the lows. I've entered a really small one, and I'm going to watch this zone here as well. There's a trend line, it's rising. It's always a bit fragile when it comes to test. I really want to keep this whole zone in mind. 1862 to 1868. Okay, I think this is going to be a very, very important zone. If it goes below there, I'm going to be gone. But as long as we're above there, I think we may start to find bids again in the dollar rand. The situation over there in South Africa is still very dire. I'm still quite negatively oriented in the rand. Did you cover the dollar CNH today or not?
No.
So there's not a lot to cover. It's trading around 730. But where was the fix? Because
below 7.1986.
Okay. Yeah, so they're keeping a firm grip on things. So for as long as that happens, I think Ryan may be having the right position is to sell rallies, because they will keep tabs on it. If it comes down here, I'm going to be very interested again. First of all, just to monitor this zone here, 728, 729, 727, and then this one, the support here, which is a trend line as well, coming in from further away. Call it 25.5, 26. Okay, this is perhaps a bit of a do or die level. For the time being, I'm not touching it. I'm still thinking that the situation in China is not good, but we know the Chinese, if they really put their shoulders under the thing, and if we start to get really below, we could actually be in for a reversal. But for as long as it doesn't happen, I may take the other side here and just for a tryout. And that really is it for me today, my dear friends.
Thank you, mate. I'll just grab the screen back when you're done. Okie dokie, see that right? Yeah, cool. Yeah, just going back to the Japanese stuff, and I think you make a good point on the yields. I think that's something that you need to keep an eye on, the 10-year, to see what's happening over there going into the BOJ, because if we're under pressure, you know, yields are really pushing higher, that might bring Ueda out to soften his comments that he made this weekend. Because one of the things they do, and a lot of central banks do it, is they drop in these little bombs to see what the market reaction is. So, you know, talking about negative rates, ending negative rates, dropping it now, even though saying, you know, it's not for another 6 months potentially, and if, you know, lots needs to happen before it happens. Just dropping a comment now puts it in the market's mind, and then they can gauge the reaction. Now, the reaction in dollar yen, okay, we come off 200 pips, we've gained back 100 pips. Okay, no one's crying foul over that. But if you start to get a bit of pressure on yields going into the BOJ's cases, that might just get him softening up the tone, you know, pushing we're going to continue easing, and that will take a bit of pressure out of the moving bonds. Now, what you can do handily on TradingView is you can set yourself up a little watch list and put all your specific related assets and currencies for something like Japan or the BOJ into one little watch list, so you can keep an eye on it. So you can quickly have a look, so you get a great overview of what's going on in there. And I just want to highlight this as well, that if you follow us here, we do have an affiliate deal with TradingView. You can get free access to ForexAnalytix with a annual subscription to TradingView. So if you do use TradingView, think about that. There are some terms and conditions. You have to be a new customer of TradingView to take part in that, but have a look at it anyway. If you're paying for a sub, then you might as well try and do it through us, and you get yourself some access to the chat room, and existing chat room subscribers will just get that added onto their time anyway. So we always like to try and do things for you guys and girls over there, help you on your way, get you the best tools available. And on that note, we shall call it a day for today. Thank you for all your support and coming to the Flow Show and watching us here. Thank you, Kay, as always, for his valuable insights. And we shall see you all tomorrow for US CPI Day.
Ta-da.